What's up, everyone? In this video, I want to talk about a custom indicator. I did not make this. I do use it on thinkorswim, and the concepts still will apply no matter what platform you do use. You all know how much I stress volume and price analysis. In fact, all of my trades are based off of price and volume. They are the most leading indicators, and they tell you the best story about the market without anything lagging in between. So I'm going to break down how I use this indicator, how it helps me take great trades, and how to avoid low quality setups that I probably would have lost money on. If you are a member of the Discord, it is in the thinkorswim tab. If you are not a member, I will send out the indicator. Just subscribe to the channel, drop a like, and comment your email down below, and I'll get to sending these out as fast as I can. Before we get into the lesson though, if you want a very good resource, I definitely recommend following me on Instagram at InvestiTrade. I post daily trading recaps on here, along with very good trading tips and tricks that I guarantee you're not really going to find anywhere else. Link is in the description below. You're definitely missing out if you're not following it. But now let's get right into this indicator. The first way I use this indicator is it helps me avoid certain setups. It helps me avoid certain conditions that I know as a day trader or scalper should not be trading in. What I mean by this is this indicator has a daily average feature and a today's volume feature, meaning this will calculate the past 30 days of volume, average it out, and then it'll tell me in real time as volume is developing how much volume and shares or lots we've traded in a single day. Now, what I mean about avoiding certain setups and avoiding certain conditions, when the market has lower volume, it is very easy for the market to become manipulated. Whereas the more volume you have, the harder it is to manipulate the market. So when I see lower volume, to me, it's a lower quality of a setup, and I try to avoid the market completely. For example, today on NQ, now you all know I trade QQQ options off of this chart. Here we have the volume indicator, and today, obviously, as the market is closed, we did 378,000 lots compared to a daily average of 573,000 lots, which again, we have been seeing lower volume conditions. So this average is definitely on the lower side of a normal average. We did bounce off of demand, and I did play QQQ calls off of this, but because of the volume in the first 20 minutes, 30 minutes of the market open, it was significantly lower as price was painting its picture on the chart. Volume really wasn't corresponding to volatility, and there really wasn't any momentum in the market. So this to me becomes a lower quality of a setup. Yes, we hit demand. Yes, we rallied inside of supply. But if you are watching price develop and seeing volume build intraday, there really wasn't anything of quality going to form because of the lower volume conditions. As you can see down here, if we go to a 5-minute chart, let's just say volume is slowly bleeding out. We really don't have any high volume, and today we closed at 378,000 lots. Same thing on the S&P 500. We rallied, and we actually had a bullish plan on this inside of supply today, but volume was at 980,000 lots compared to a daily average of 1.6 million. Now that says a lot about the auction. We all want to see participation in the market. If there's no participation, then the setups really aren't going to show any interest, and they become lower quality. I always grade my setups on higher quality and lower quality, and the number one deterrent to lower quality setups are lower volume conditions. Now here's Apple. This was also on watch. I posted this in the pre-market plan. I post plans every single day in the Discord. I said it's starting to warm up to me. We don't have much supply above. I would like to play calls on this above 147.96 as long as ES and NQ are strong and Apple could slice through supply. We also had demand below. But if you look, Apple traded an average of 76 million lots today. Obviously, with the last 5-minute candle had the highest of a little bit over 5 million. But as the market was developing, volume was developing just as low as we closed at. And I think there was like 20 million shares traded in the first hour and a half. And that's very, very low, especially when you want to see something have continuation. And on top of using the market context with ES and NQ, with its lower volume conditions, quality of setups are much lower on other equities, especially when the volume on itself is extremely low. So the point I'm trying to get across here on the first use of this indicator is it helps me avoid setups and it helps me avoid certain conditions that I know I'm going to get chopped out at, I know I should be avoiding, and conditions that are manipulated and spruce up my emotions. Another way I use this indicator is it helps me trade certain conditions and it tells me when I really should be an active participant in the market, talking about an intraday basis or even a larger time frame market context picture. For example, this day, I think we gapped up. This is on a firm back in September. In the first 20 minutes of the market open, we traded 9 million shares compared to a daily average of 5.5 million. So in the first 20 minutes of the market open, we already traded higher, almost double our daily average. What this tells me about the auction is we have significant interest. We have significant participants actively trading or actively investing in the market. And this is where we're going to find quality setups. This is where it's going to be easier to determine market context. This is where it's going to be easier to determine which participants are putting pressure on who. I will say this indicator helps tell you which way the wind is blowing. It helps show which participant is presenting more pressure. More pressure on bulls is bearish. More pressure on bears is bullish. Just because you see red down here doesn't mean it's bullish. And just because you see green as on demand is catching up right now, just because you see red doesn't mean it's a sell either. This just helps you which side are showing more pressure. And it doesn't mean when you see X, you're going to get Y. How you use this indicator is when you see X and Y happens because of it, you get Z. It's not a 100% guarantee. It just helps determine context. So when I see this, we traded 9 million shares today, almost double our average. We know if we have sellers maybe near pre-market highs or supply near 111, as soon as we get above and maybe test those sellers and put pressure on them, we're going to get that nice rally. As you can see, we had a nice push up. We had continuation. We held the VWAP as support. This was just telling me the wind is blowing towards the bull side. Now, my job as a trader intraday is to figure out where it would make sense to have an entry that my risk to reward makes sense. I'm risking little to make a lot. Now that I know the wind is blowing more towards the bulls as they are putting pressure, now the indicator is now turned green, which means we are significantly, I think more than double above our daily average, where it was just yellow that it was a little below it. Look at coin the past 4 days. Volume started to build. Today we traded 4.7 million shares compared to about of a 4 million average. Look at the past 4 days as the green buying pressure started increasing. Look what to the candles, and the past 4 days we had 4 very strong rallies. This tells me increased participants, increased interest, and this is where you're going to find the best setups intraday now that we have this context from a little bit of a larger time frame picture. This indicator also helps with playing breakouts. I cannot stress how important volume is if you are playing a breakout. Like I just said, increased volume shows pressure, increased volume shows participants, and increased pressure shows interest. When you are trading a breakout, for example, this Microsoft trade, we've been watching this setup probably the past 2 or so weeks. Every webinar it's been in, we had demand lower and we were watching for a breakout above this 305.20, 305.80 level. All day prior to that, we were very quiet. Volume was very low, and this is something that you really have to be a little cautious about. Another thing I do want to mention is it doesn't always have to have a higher volume type of day for the best setups. And it doesn't really mean if there's lower volume type of a day, doesn't mean you really should avoid it either. You have to use context and you have to see how price is developing in relation to the volume that is developing. Meaning if we are moving up and volume is kind of low, but we are having nice moves to the upside, then it might be okay. But if we're trading sideways and you're watching the market paint its picture as volume's dying out like this, you should really avoid it like we have been seeing. But we had a quick pop, buying pressure. Look at that very thick green candle to the upside. As soon as we came to the 305 area, then we started consolidating. A very bullish sign is once we get increased volume, then volume dies out, but price just hangs out there. If we start moving up, which you're going to see in a later example, and price starts heading lower, that's going to show an area of absorption with buying pressure absorbing, or the seller absorbing all those buyers. However, we had a green candle, buying pressure up, price just hung out there. We consolidated. Consolidation is bullish as long as there's intention. And then we got some more buying pressure to come up. Same thing, volume started dying lower. We still stood up there. And now buying pressure is increasing. And we had a clean rally from that 305 area with slight volume increasing. We would like to see a little more, but that is acceptable. Another example, this is Tesla. Price is very flat. Volume is dead. In the first 4 or 5 hours of the market open, this is action that should have been avoided. Now, it didn't come until about an hour and a half before the market closed. Price starts moving up, very strong green candle. Look at the buying pressure down here. We start building. In fact, it's one of the highest volume bars compared to the first one, which is always the highest. So that tells me volume is building. Look at the next one. We start getting increasing volume pressure, and we continue to move up. Buying pressure is increasing. Sellers that were factored in at this area are now having pressure from those buyers. As long as we have price continue to move up with green buying pressure, we are going to get a clean breakout, even above the 800 level, even above this basing period. So there's multiple ways to trade it. Just get creative and respect your risk. Even a larger time frame context standpoint, this is AMD. Look at the past week. Look what price did, and look at the result of that. Very strong, heavy green buying pressure volume candles. So that's something you want to see if you're playing into the long side, a breakout, or even larger time frame market context. The same applies to a breakdown. On breakdowns, we want to see heavy selling pressure being put on the buyers that are factored into the market. For example, this is a S&P 500. I trade SPY options off of this chart. We rallied into a supply zone and the market starts selling off. Now, it depends on how you trade, your style, your strategy. If you want to see selling pressure at supply, which is what I do want to see, sometimes depending on the conditions, it gives me a good enough reason to be short, but not all times do I just see selling pressure, and I, play puts or play a bearish position. You have to use context. You have to put the pieces together. But in this example, we rallied inside of supply. Now that we have the context that sellers are being built in, now we start seeing some selling pressure come into the market, definitely outweighing the buying pressure. And we continuously put lower lows, lower highs, rejected to the supply, some nice red candles to the downside, and we sell off into this demand zone. A couple things I will want to add. Is that the bars are a full bar. So if you see a full bar of red, that means a full bar of selling pressure. If you see about a half bar of green, half bar of red, that's one full bar, but the pressure is about half side to the bulls, half side to the bears. Normal volume will usually be color coded to the color of the candle, not so much of pressure. And certain platforms will have this indicator that color codes it, depending if it was an order that hit the bid or depending if it's an order that hit the ask, showing buyers or sellers. TOS does not split volume from bid versus ask. Also, something I call market tricks, whether we're seeing a lower day break, some stop losses being triggered, or even just buying pressure in demand. I have plenty of recap videos. There's even some videos in the course about market tricking retail traders. For example, this is Apple. Market sold off into this demand zone. As soon as we came into demand, we started seeing higher volume and price disagreeing with it moving lower, and we got a nice bounce from buyers. I even posted this on my Instagram. I said market tricks. Smart traders need retail liquidity in order for their orders to get filled, and they buy or sell on the other side. This sell-off right here tells me a lot of longs from the earlier day are getting stopped out. Inside of demand is definitely a recipe for reversal. And then another way I use this is market starts selling off, volume spike, a sharp increase, price decline, long side reversal, volume spikes up, could be a sign of capitulation or accumulation. For example, if I pull up the ES chart and go back to on demand, here's the example back on April 29th. The market sold off. We had some heavy selling pressure down into demand. You could use a 5 minute, you could use a 1 minute. It really does not matter. But if you go to a 1 minute, you could probably see a little better. But look at the highest volume of the day. If you are understanding the auction, there's a buyer for every seller, a seller for every buyer. What this tells me is the market's selling off. You have a bunch of fearful traders, maybe late shorts, late sellers, or just even long stopping out. When you add a demand zone to the context, heavy volume, this brings fear, capitalization. A lot of participants are selling inside of this demand zone. For every seller, there's a buyer. Good recipe for a reversal, heavy buying volume, or even just volume in general, the highest of the day at the demand. And we had a nice strong rally out of that. So there's just a lot of different ways you could use this. Another way I use this indicator is like this. Euphoria could also be seen as some type of distribution where we get a very large volume spike. We get a very sharp increase in price, yet there's no continuation to the upside. What this tells me is everybody is longing the market. The market will move up until the last buyer does buy aggressively when there are more passive sellers than buyers. And that indicates a short side reversal. Now, if you throw a supply imbalance on there, it's even a higher quality of setup. But use everything I gave you in this video so far. Volume started increasing. Even prior to that volume spike, buying pressure started increasing down here, right? Price started to show some intention to the upside. Then volume started coming in. Maybe you take it long here, targeting supply. Maybe you didn't take it long and you want to play puts at supply. But we had no continuation. Heavy, sharp buying inside of supply. Everyone thinks the market's going to explode. We're going to keep ripping up. Everybody is buying, fueling the supply imbalance. Passive sellers outweighing the aggressive buyers, and the market moves down. Same thing here with Tesla. Volume started building. This is the example I showed you earlier of what you want to see if you were playing it to the long side. Market moves up. Highest volume of the day. I'm sure if you go to a 1 minute chart, you could probably break it down to maybe 1 or 2 1 minute candles. This is on a 5. It doesn't matter what time frame you use. The concepts still apply, whether you're talking about a 1 minute, even like a daily. It doesn't matter. Market moves up. High volume, no continuation. The market comes back down. That gives us weak context. And maybe you could capitalize on puts if you didn't play it to the long side. So the whole idea with this video is this indicator helps tell you which way the wind is blowing, which participants are showing more pressure, bulls, bears. Just because you see red volume doesn't mean you have to play it to the downside and the market's going to come down. And just because you see green volume doesn't mean the market's going to move up and you should play it to the long side, you know? Also, the more volume you see, the harder it is to manipulate. So use that little feature once I send you guys this indicator showing if there's high volume or low volume. See how it paints the picture of the market. And if we're moving very slow like we have been seeing on even like ES and NQ, trade a little differently. Don't try to go for a home run, do 100 contracts and blow up your account because you're trying to be a hero when the market conditions really aren't, agreeing with your analysis. So get creative with it. There's a lot of different things. This isn't if you see X, you're going to get Y, or you see X, A is going to happen. It's when you see X and you get X and then you put Y together and maybe you see A and B, then maybe you're going to get C. So it just adds more pieces to the puzzle, gives you more confidence, more conviction, and is a very good tool. I cannot stress how important volume is. But besides that, if you want the indicator, comment your email down below. I'll send them out periodically. And if you really want to learn more, subscribe to the channel. Check out the links in the description below. I offer a very in-depth course that comes with access to the Discord at no extra cost. I just did add a voice chat feature to it. It's a very good feature. Members are enjoying it, and there's some very good lessons that get spoken on a daily basis in the chat room. But besides that, I'm ending it. Peace out.